Good morning and hello. It's me, Kenny Polcari, your host of the Party Morning Market Commentary. Everything you need to know about what's going on today. As you can see, I'm not in my office in Boca, but nor am I on the beach in Palm Beach. I'm actually at the Grand Ole Opry in Nashville, Tennessee. I arrived here last night. I've got a convention here for the next couple of days. I'm just overlooking the courtyard from my balcony room. It's really spectacular here if you've never been. There's all these waterfalls in the background. I hope the noise doesn't really impact the video. I hope you can hear what I'm going to say. So let's see. What do we got going on today? Futures are higher again today. The same way they were yesterday until the market became a little bit concerned. So what do we need to know, right? So yesterday the mood went from buoyant in the morning to sour in the afternoon. But like I said, this morning it is buoyant once again with futures higher. Oil did test the trend line yesterday down at 70.60 like I thought. I said it could. I wasn't really sure it was going to, but in fact it did, as that whole China weakness story kind of took hold, right? More economic data today to support the narrative. Yesterday the economic data was weaker. We'll talk about that in a minute. And vaccinations are beginning to become requirements if you want to go back to work in some parts of the country and in some businesses. And what do we have for dinner tonight? We're going to have the chicken pieces, the roasted chicken pieces with hot Italian sausage and cherry peppers. So good. Now look, stocks started the day stronger yesterday, right? The Asian and European markets were all higher going into the morning. U.S. futures were pointing up on the day. It was all very exciting in the pre-market, right? It was the first day of August, the bell rang, and stocks advanced as trading got underway, right? Look, it's been an amazing quarter. We know that. 88% of the reported companies have beat on the earnings per share. They beat on the top line and the bottom line. The net margins are better. Bottom line profits are better, right? It's been a strong, crazy quarter. But we knew that was going to happen. But yesterday, 13 of the companies that reported, only 9 of them beat, resulting in a 70% rate. And that's going to drag down the overall quarter percentage. And then we got some conflicting economic data. Market U.S. manufacturing PMI, which came in at 63.4, which is a really strong number, was one thing. But then the ISM manufacturing PMI came in at 59.5, down from 64.3. Strong, but trending lower, which is not good, right? Then construction spending came in at 0.1% versus 0.4%, and that caused some angst. Now, none of this is horrible at all, but it was enough to just cause the angst meter to rise. The VIX shot up 7%. The 10-year Treasury yield plummeted to end the day at 1.15, suggesting that the pace of the recovery is slowing and stocks got weaker. By the end of the day, the Dow gave back 97 points after swinging 385 points from high to low. Before it closed, right? The S&P lost 8 points after swinging 38 points from high to low. The Nasdaq, bucking the trend, gained 8 points. Think weaker recovery, more Feds, lower rates, and the need for growth stocks. And that swung 105 points from high to low during the day, and the Russell ended the day down 11 points after its 44-point swing. But look, we know the pace of the recovery is slowing, right? It can't keep up at the current pace that it's going in. Companies have expressed that in their reports, and we've talked about it. Analysts have said it, yet markets continue to march higher, oblivious to how out of whack it has become. And so anytime anything of the slightest weakness pokes its head up, the market's reaction is to sell off. And while it doesn't sell off hard, it's just a matter of time before it really does, right? Now, I'm not wishing for a crash, not by any stretch, but I would like it to see it shake the trees a bit, right? I want to see the market rebalance itself. In order to do that, it's got to back on. And we know we're entering the time of year where this potentially could happen, right? The August to October time of year. The usual suspects yesterday caused the nervousness, right? The surging Delta variant that's now causing some states to reimpose the mask mandate, whether you're vaccinated or not. California, Los Angeles did that, parts of California did it. New York's Governor Cuomo is now asking all private businesses in the city to be vaccinated-only businesses. Prove that you're vaccinated or you can't go in. That's how he wants to have it, telling us that he thinks it's a good idea for your business. Leaving some to ask, what does he even know about running a business? He's never done it. Yet, what we're seeing is a whole host of publicly traded companies demand that employees be vaccinated or else you can't come back to work. And that's going to cause its own set of problems. Davis Polk, one of the nation's largest law firms, is going to turn off access to anyone that is not vaccinated at the firm. So as you can see, the pressure is building on the holdouts to get vaccinated or else risk being unemployed. And this too is causing some angst in the economy, and then by default, investors. And this is far from over, because this conversation and this argument, I think, is going to go on for a while, right? next? The falling yields are suggesting that the slowdown is imminent, right? But we know that, again, slowing down from the current pace. That's all that means. And it's still uncertain what the Fed move is going to do, right? Leaving some investors on the edge of their seats, wanting to be the first one out the door if the mood and tone changes, yet they also want to be in the room if it doesn't, right? So they want it both ways. They've got to cut it both ways. They've got to figure out really where are they sitting. And so most of them are sitting just on the edge. Oil, as I noted in yesterday's blog, was under pressure due to the weak China data from Sunday. And it actually closed down 3.3%, right? They did push it down to $70.60, which was a trend line, before closing at $71.49, right? A level I didn't think it was going to test the trend line, but it is what it is. And when traders and media accentuate the negatives, that's what happens. Now, this morning it's up 30 cents, trading at 71.80, and what looks like a move back to the mid-70s once again. Look, there's a ton of buying momentum, and it's hard to bet against that, right? But we are in a seasonally weak time, so investors should be prepared for more volatility in the weeks ahead. And while the Fed has not surely identified a specific timeline for the start of tapering in the middle of all this, they won't either, especially as we come into September, October, which are typically seasonally difficult. It more likely will be a November to January timeframe, right? That's not a secret. Again, we've been talking about it, but Jay has been very coy last week, and he didn't really say it, so he's leaving it open, leaving people to wonder what's next, right? So expect to hear all kinds of speculation over the month ahead of the Jackson Hole boondoggle about what the Fed is expected to do or not expected to do, and that is what's going to cause the volatility in the weeks ahead. In addition, like I said, expect to hear differing points of view from other Fed members who now can come out and talk to the media as they try to float a range of ideas, testing the water and then thereby testing investor sentiment. This morning, U.S. futures are up. Like I said, Dow futures are up 143 points, S&Ps are up 15, Nasdaq's up 16, and the Russell's up 13. Again, the worries of yesterday are not the concerns of today, right? The economic data today includes factory orders expected to be up 0.1%. Expected to be up 1%. Excuse me. Durable goods up 0.8%. Capital goods ordered, capital goods shipped, as well as awards total vehicle sales of 15.25 million new vehicles. The 10-year yield is back up this morning, yielding 1.19% after yesterday's plunge, while the VIX, which surged yesterday, is now down 3% this morning. Oil and gold. Oil is up, like I said, and gold is hovering right at $18.13 an ounce. Really didn't make a move one way or the other. European stocks are also slightly higher, better earnings, and I say slightly because they're not really higher that much. Better earnings and expected better than expected Eurozone inflation data, which is due out later. The Delta variant, like here, is not causing any angst today in the markets for investors. Regional markets are all up about 0.25% across the board in Europe. Tomorrow brings us the very important ADP employment report. Expectations for an increase of 690,000 new jobs to have been created in July. Again, the surprise is going to be if it declines rather than if it rises beyond the estimate. A decline will then cause investors to celebrate continued stimulus from the Fed, while a surprise to the upside will then ignite the when conversation all over again. But it's really Friday's NFP report that's going to drive the next move. Tomorrow's just a teaser. The Fed is going to pay much more attention to the official NFP report, which is posted by the government and is expected to show an increase of 875,000 new jobs for July. In any event, there are still 9 million jobs available, and jobless claims remain elevated, which makes no sense unless, of course, you want to discuss the enhanced unemployment benefits as the culprit. But you know what? That's a conversation for another day. Let's not go there right now. This morning, Bitcoin's trading at 38,000, just under the $40,000 mark, and Ethereum's trading at 2,400, just down about $150 from yesterday's close. The S&P closed last night at 43.87, and this morning it appears as if it's going to kiss 4,400 again. But remember, that tune can change on a dime like it did yesterday, so just get ready, right? You get one piece of negative data, you have people starting to talk about taper, and boom, you're going to see the market turn around. I'm still thinking, kind of hoping, that we get this 7 to 10% correction over the next 2 to 3 months, right, through September. In any event, you know what to do. Stick to the plan. Remember, investing is dynamic. Keep cash ready to deploy. Rebalance where you need to, but just don't be so quick on the trigger yet, because I think patience in this case is a virtue. Now, you know what you can do? You can text the word INVEST to 21,000 to get my digital business card. Give me a call, send me a text, send me an email if you want to discuss the markets or a plan. You can also catch me on Twitter. My Twitter handle is @KennyPolcari, just like my YouTube channel, which you're obviously watching this now, @KennyPolcari. I'm always happy to engage, and I love the commentary, so keep it coming. Thanks so much for that. So what are we having for dinner tonight? This one's really great, partly because it's roasted chicken pieces with potatoes and hot Italian sausage and cherry peppers. Now you can use sweet, but this one is a little bit more spicy, and the cherry peppers just add a little bit more tang to it. It's a great party dish. It's a great dish to make if you're having lots of people over, if you want to be part of a barbecue table, right? So for this, you need the thighs and the legs, right? Bone in, skin on. You can use breast too. Remember, the breast meat is dry, right? You need salt, pepper, olive oil. You need hot Italian sausage, cherry peppers, garlic, white wine, chicken broth, marinated artichoke hearts, thin sliced potatoes, salt, pepper, flour, and you need probably a total of about an hour and 10 minutes start to finish. You're going to preheat your oven at 375 degrees, preheat the grill for cooking the sausages, right? So get everything ready to go so when you need it. You're going to season the chicken pieces with salt and pepper. You're going to take a big frying pan. You're going to heat up some olive oil in the frying pan. When it's really hot, sizzling, you're going to reduce the heat to medium. And then you're going to add the chicken pieces. You're going to brown them on all sides, right? So maybe you cook the chicken pieces for a total of 8 to 10 minutes, but you got to cook them all, right? So however many you're making, you got to cook them all. Then take these thin sliced potatoes that you sliced, thin sliced potatoes, put them in a baking dish. Add the chicken from the frying pan. Put that in the baking dish. Season it with a little more salt and pepper. Stick it in the oven and let it cook for about 30 minutes at 375, uncovered, right? Now you're going to take the sausage on the grill. You're going to cook that. Careful not to burn it. You're going to maybe cook it, brown it on all sides. It might take you 10 minutes or so because it's going to finish cooking on the stove, right? You're going to bring it in. You're going to let it rest a little bit just to cool off a little bit. Then you're going to cut it into bite-sized pieces. You're going to put it back in that frying pan that you did the chicken in. You're going to add some white wine, maybe half a cup of white wine. You're going to let that reduce. Now you're going to add half a cup of chicken broth and the artichoke hearts. You're going to season it with salt and pepper. You're going to saute the sausage in that mixture for about 3 to 5 minutes. Now in a separate bowl, you're going to whisk together a little bit of flour, a couple of tablespoons of flour, and some milk. You can use water if you want, but milk is always better. Add that to the frying pan and let that thicken up a bit, right? Don't let it get too thick. Otherwise, it'll get like paste. So you can always add a little bit more broth to it if it looks like it's getting too thick. Now take the chicken out of the oven with the potatoes. Take that all and add that into this frying pan, into this sauce with the sausages and artichokes and cherry peppers, which you've all put in there, right? Because you did the sausage, the cherry peppers all at once. You toss the artichokes in there. Now you're going to add the chicken and the potatoes in there. You're going to turn the heat down to simmer. You're going to cover it, and you're going to let it all blend together, making sure, once again, that you don't let it get too thick, because if you put too much flour, then that sauce is going to thicken up really quick, and it'll become pasty. Again, that's not what you want. So if that happens, just add a little bit more of the chicken broth. Look, you can always add a little bit more of the white wine if you want, but you want to keep it. You want to keep it thin, right? You don't want to be. You want to keep it like a sauce, right? You don't want it to be watery, but you don't want it to be thick either. In any event, you'll figure it out. Then, when you're done, you're going to take this, serve it on a big white platter, because between the cherry peppers and the sausage and the chicken, there's lots of color that's going to burst out. Place the platter on the either on your dinner table as home style, or put it on the buffet if you're having a barbecue, along with all the other food you're putting out there. It's a great dish. You're not going to mix it. And look, if you don't like hot Italian sausage, use the sweet Italian sausage. It's fine. You can interchange it. This one, though, specifically because it's a little bit of a tangier dish, it calls for both the hot Italian sausage and the cherry peppers. In any event, I hope you enjoy. It's a spectacular day here in Nashville, Tennessee. And as you can see, I'm about to go explore the Grand Ole Opry. Take good care, and until tomorrow, have a great day.